All right, I'm gonna do something different here. We're on the 16th. I'm going to just do individual stocks for every video, just to break them up a little bit. We're starting off here with coin. So again, if you watched my last video, that was yesterday pre-earnings, and I said that I was now looking for a higher price. The reason I was looking for a higher price is you can look at the weekly chart, and just based on how we were making a move higher here, it just seemed like it was an impulse move. I was originally looking for this down to here to monthly demand, and I was actually only expecting like 150, but we got an impulse move. And so with that, you have to rethink what's going on here. We got a big move right here, so that's probably has potential to be a third wave. Originally, I was looking at it as a WXY move, where WXY, and then this is going to be A, B, C, like that. But now that we got this move, we made a new high, and it's an impulse move, I don't think there's any way you could say this is not a third wave completion right here. So we have 5 waves right here. We made a new high, so it's got to be 5 waves. And based on this first wave, you would actually have a target. I would have a target of potentially 278. Because that's the thing too, we did not get outside the parallel line though. So that's the other kind of messed up part about this move. So it's kind of tricky to say, is this 5 waves or is this still the pattern that I originally had? And again, also, this move could potentially be, if it's going to go down here, I still have that count available. If it's going to go down here, I would be looking at this as just a very extended B wave. But again, this is going to take like a huge market correction for this to happen. We already hit 193 today. So for this to come down here to monthly demand, it's going to have to be a big, big correction in the overall market. They just had good earnings. So I would say it's highly likely that this is the 5th wave of the 3rd wave. So let's get into the smaller time frames now. We have daily demand down here at 144 to 136. That's the next daily demand below. We have a 4-hour demand and a gap fill here at both 166 and at 161. And then we have daily supply up here at 202 to 213. And a gap fill up here at 220. So looking at this move, we get a very shallow second wave here. It only went to the point, it didn't get to the 0.38 fib. So that's something to keep in mind. And then we get third wave right here. I think the third wave is likely finished. We hit the 1.61 fib. We fell from 193 all the way to 179. See, we hit the 1.61 fib. So we can zoom in here a little bit farther and just see what's going on. We had a move down, made a lower high, and now we're moving down here. So this actually could potentially be the end also, if my original WXY move is correct. This could end up being a 5-wave move. So I'm watching it. If it is a 5-wave move to the upside, then I'm actually looking for a pretty deep correction here. Because we got such a shallow second wave, I'd be looking for a deeper correction on this 4th wave, potentially all the way down here to the 0.5 fib around 163, maybe even gap fill 161. First wave invalidations at 150. I think there's a very good chance we come down here and gap fill early next week between 161 and 167 if it's a 5-wave move. And then I'd be looking for a move after that all the way up to potentially 220, but maybe even higher than that. Because again, if this is going to be 5 waves, we still need to get outside this parallel line. This parallel line is at 243 right now. Let me zoom out and make sure that's correct. Yeah, we'd have to get outside of basically like 240, 250. So potentially a big 5th wave coming up here. Otherwise, it probably would end up being some kind of B wave, I would think, some kind of extended B wave. Even though I'm putting it as 5 waves right now, we're gonna find out here soon. But look for 161 to 167 and another move higher if it's 5 waves. If this ends up being a B wave, it can go all the way to my original target of 86 bucks. And that could still end up being the B wave, overall B wave. Because again, this right here took about 2 months. We're sitting at about a month and a half right now, a little bit more. Let's just see how long this A wave lasted. I'm assuming it ended right here. That is the 1.61 fib. This was some kind of, if this is an ABC with an extended C wave, it is taking about, this took about 23 days. We're a little bit over 23 days right now into February, but that's completely fine. You want the B wave to be longer than the A wave in time length. So it's still right on pace to have a very, very strong move down here if my original count is correct. So again, the 2 paths laid out here, you're either going to see this, or you're going to see, if it's a 5 wave move, you're going to see some kind of crazy move higher. Potentially something like that. It'd probably take a while. And I don't have any preference on which one's going to play out. My trading doesn't really rely on long-term projections. I'm just giving them for the channel. But again, I'll just wait and see. If we do hit this 4-hour demand and it looks like it's consolidating, I'll probably buy some shares here. And then I'll see how it comes out of here. If I get lucky and it goes much higher, I'll make a bunch of money. If it looks like it's going to bounce out of here, then I'll probably take profit quickly and be prepared for the next move down here to monthly demand around 90 bucks. So I sold all my shares between, I took profit at 175 yesterday after hours all the way up to like maybe 184, 185. So I didn't hit the very top perfectly, but I was just, strictly trading, trying to make some money on it, which I did. And I'm all out of my shares now. So I'm just waiting for this to play out, see what it does. And that's pretty much it. Last thing I can do is, let's just go over the moving averages and just see where we're at with standard deviations. So another thing to look out for here is, and why I am long, and I want to be long and I want this to go higher. You do have to take into account here. Look at the standard deviations here. Got outside of them, big drop. We're getting close to the very top again. So don't be surprised if my original prediction down here actually hits. Maybe it doesn't go all the way down here though. Maybe it only comes down here to like 110. But again, monthly demands here. If there's a big market correction, that can happen real easily. As far as the weekly, we are way above the 50 and the 20-day moving average. Another red flag there. So based on these two, I would say that it's more than likely that we are looking at my original prediction coming true. We're going to fall from here, just based on how far above we are of the moving averages. Let's look at the 200 as well. So 200. Maybe there's not a 200 on the weekly. Let's see on the daily. So on the daily, we have the 20 down here at 136 and the 200 down here at 96 bucks. So again, based on standard deviation and moving averages, I would say W or ABC move is more likely, and this is likely similar to if you go back and look at the 1929 market crash. It had a big move like this, and everyone thought it was an impulse move, and then you got this. So watch out. That could play out still. I'm still watching the upside though, even though we are overextended, because again, if it drops here, it can still do this. Maybe we can get consolidation next week and then make a move higher like this, and it just takes a long time. So that's pretty much all I gotta say on it. Those are the two patterns I'm watching. I don't see any reason to be really that long here though. I think consolidation for a fourth wave, or we're starting that big move down here to 100 bucks. That's it for now. I'll probably start doing more individual videos. Leave me a comment, like, subscribe for more updates. Let me know in the comments what you want me to look at this weekend. We have 3 days, so I'll probably do more videos than normal. And let me know. I will talk to you guys soon.